Okay, so I guess we are just hitting 11 o'clock here, so we're going to kick this thing off. Like I mentioned, if you have a great suggestion for a rebranding name for our luxury Zoom here, throw it in the chat. We're going to be potentially looking at making a rebrand move. So throw that in there. Anytime you come up with something, or email me separately is fine as well. So wanted to just give you a quick reminder that luxury symposiums coming up for any of the earned in agents or luxury pro. Seth, are you going?
I believe so. I still have to move a previous obligation, but I'm making some headway.
Awesome.
Oh, you better go, Seth.
Yeah.
Yeah, you tell him.
I'm also a very passionate golfer, and Phoenix has some pretty decent courses.
There you go. Incentive for you. Well, that's October 21st and 23rd in Phoenix, Arizona. So hopefully you guys are going to make it. I am definitely going. I have signed up. I've paid for my flight, paid for my hotel. So I am all in. And with that, I wanted to introduce our guest, which is Seth Levin. And he is from New York. He's an amazing agent. I met Seth. Seth, correct me if I'm wrong, we were on a luxury panel together in New Jersey, correct?
Yes, but we actually met at Gary Keller's Top Team speed dating. We were at the same table. I remember you sat next to me on my right. I have an uncanny memory for stuff like that.
I love that. I love that. Okay. So we go way back. We go back even further than I thought we went back. So that's awesome. But, I always choose my guests carefully. I always want people that I think will bring value to you guys, people that are humble and willing to share and that have, valuable information for you guys. So I picked Seth. He comes from 20 years of experience in real estate, which is, I don't know how you're still surviving, but great job, Seth.
Yeah.
7 years here at KW. He's closed over $1 billion in real estate in his career, which is, I can't even imagine. He's been the top team in New York City many years, and he's a negotiations and a luxury trainer. So he's got a lot to offer us, not just as a real estate agent, but also as a trainer and an amazing luxury agent. So welcome, Seth.
Thank you. I appreciate you having me, and I love sharing. Real quick, when I started my career, I was at Douglas Elliman for 13 years, and with few exceptions, people were not collaborative. They weren't sharing their trade secrets. So when I came over to Keller Williams, one of the reasons I came over, I was just so impressed with the collaborative culture and the nature of sharing and opening the books. And I decided I wanted to do the same. It was more in line with my personality. So I started teaching negotiation, breaking into luxury, building a boutique brand, all these different things that I could take on the road and share with other agents. I love doing it. I love speaking on panels, at conferences for young professionals, all that kind of stuff.
Well, we are glad you came here so that we can learn from you. And I agree with you. KW is the place to go if you're going to want, to be, team and learn and collaborate. So great decision.
Thank you. I think so too.
All right, Seth. So tell us what is, you've got a little bit of a different business model than the other luxury agents that we've had on. And I love that. I feel like you are like the heart and soul of true luxury. So tell us a little bit about where you focus.
Okay, so I got into the business July of 2003. It was a hyper aggressive seller's market, and I was in my 20s, and my clients were all buyers through, I would say, 5 key relationships. The majority of my business still to this day sort of branches off from some key relationships. So I have one high net worth client who was actually from Zambia, who had a very deep high net worth Indian group of friends. They were all private equity, hedge fund. And I went to weddings 3 times in India, Africa, Thailand. I got as deep as I could in the group of people. But it was genuine. You know, you can't break into a group of people where there's not genuine interests, whether it's art, golf, travel, food, you know, something that's, you know, genuine to me that I share with those people. So when I first got into the business, which is very counter to most people's entry into real estate, I started with a luxury business. I had these hedge fund buyers buying $3, $4, $5 million properties in the early to mid 2000s, which was pretty high price point back then. It's probably the equivalent of like a $15 million apartment now in New York.
Wow.
And I sort of worked backwards into the middle of the market, just to expand my reach, and based on referrals that I was getting, people had different price points. But I really started in luxury. I didn't go through the rental, first-time home buyer phase. I actually work with more first-time home buyers now than I did in the beginning of my career. So through that, I've learned that it's not about, and luxury is different than the middle of the market. Middle of the market, you want to have 1,000 conversations constantly. My mantra is business begets business. So I want to be in business with the right people. I want to leverage their huge, influential, high net worth databases. It's more important for me to be deep with 50 people than to be speaking with 10,000 people. That doesn't mean that my database isn't 10,000 people, which it is. And we market to those 10,000 people. We try to be, you know, somewhat in relationship with them, of course. But my business is being really, really deep, going out to dinners with my most influential people, going to their charities, donating to charities in their name. When I take them out to dinner, I ask them to bring a friend. You know, I'm trying to get deeper and deeper in their world, as opposed to, you know, constantly be talking about real estate. Although I am an idea presenter, if I know somebody has the means and the interest, I'm not going to wait for them to come to me. I'm going to present an idea. You know, there's arbitrage opportunities always in New York. They might be sitting on a property that's, you know, in a hyper competitive seller segment of the market, which happens in New York. There's different micro markets operating very differently at the same time. So I may talk to them and say, you know what, I know that you're an investor, or you think like this. You can sell your place in the West Village right now. You know, there's no inventory. You're going to get top dollar. And then there's a weakness in the market in the Upper East Side. I know that in the past you talked about the Upper East Side. So it's getting deep, it's presenting ideas, and it's getting more and more in their world, in their ecosystem, and, you know, making a connection between them and somebody that I think will be beneficial to them, as opposed to calling always, you do know anybody looking to buy, sell, invest in real estate? That's never the conversation that I have.
Right. So let me just walk you back for just a second. So the very first couple of deals that you had, how did you start with those few people that turned into such an amazing network? Like, you know, where did you get introduced to those people? Because I'm sure everybody on here is like, oh, I need that person. Like, where did you find them?
I'll be very honest, depending on how old you are, my technique might not translate to where you are in your life. I was going to clubs with these high net worth people. I was staying out later than I should, just to get deeper and deeper. I'm 47 years old. I haven't seen a club in 2 decades. But at that point in time, I was, you know, whatever their social ecosystem was, I was implanting myself in it, you know, genuinely. Now it's going to art galleries. Now it's going to housewarming, you know, parties with clients that I've sold real estate to. It's going to their charity events. But at first it was, you know, going to clubs. They were going on a vacation, you know, and I had an invitation. It didn't matter if it was above my budget at that point in time. When I talk to young professionals these days, I tell them not to spend their way into luxury, but nobody told me that because, again, there was no collaboration. There was no backstory, you know, and education and what people had done to be successful. So I overspent. I mean, fortunately, it worked out, but
it sounds like you had a great time also.
I had an amazing time. I mean, they called me Seth Levin instead of Seth Levin at these Indian weddings. I danced all night. actually went to a wedding in 2007 where I literally, my friend who was getting married, who's one of my 5 biggest supporters of my business, he invited me and he said, that guy just sold Vitamin Water for $500 million. He's going to buy a property in New York City. Talk to him. I kept dancing over next to him as much as I could. and then we started talking, and I just actually had my team meeting before this. He wound up coming back. We got a $10 million new development into contract in 2007. It was not ready until the financial downturn had occurred. I negotiated $3 million worth of back-end concessions for him because the developer wanted to keep the optics of the 10 million, but we thought that 7 million was appropriate because given the fact that we had no clue where the market was going to go at that point. And because of that, he became a raving fan. He introduced me to Priyanka Chopra's business manager, who I've worked with in the past. And I think I was mentioning to you last night through another one of my original high net worth clients, he introduced me to his brother-in-law who sold a business for $8 billion. I sold his property to Daniel Radcliffe, and then he bought a property owned by De Niro. So like, I've had a very kind of cool, experience through some of these super high net worth people. But I mean, I grew up in Eastern Long Island. I didn't go to private school. I didn't go to Harvard Business School. This was strictly through relationships that were genuine.
I love that. And I love what you said about that what you would do today is different than what you did when you first started, because we have a variety of age groups on this call, right? So we've got people that are young. We've probably got some 20-year-olds on here, and then we've got in their 60s, 70s. So I love that you said it's doing what you would do, but with people with high net worth. So if you're in your 20s, act like you're in your 20s, but with the people that have the money. If you're in your 60s, with the people that have the money. So I love that. It's basically, you're saying it's for all ages, all walks of life can get into luxury.
Exactly. So I've somebody I met through Keller Williams who moved to a resort town and was starting over. And he said, how do I, he had a luxury business in his prior geography, but that was because he grew up there, moved to a new area. I said, why don't you take golf lessons at a high end club? Because the pro is going to have more interactions with high net worth people than you could ever have, and get deep with that pro. That's different than going to the clubs, or I go to art openings, I go to, charitable galas at this point in time. It's not, like I said, you haven't seen me in a club in 2 decades. So
I love that. I love that. Okay. You told me a great story yesterday that I want you to share with everybody about your open houses.
Mm-hmm. So, at this point in time, typically we have more listings than I can handle on my own. Obviously, I have a small team, but, we leverage a fair amount of our open houses, but I make a promise to my sellers, but it's also a promise to my business that I will do the first open house at every listing, independent of price point. I had a former colleague at Douglas Elliman who moved to Palm Beach, actually, and he started referring me his business, and he referred me a $400,000 studio apartment in the back of a building facing a brick wall. 400,000 is one of the lower price points that we have here in New York. And at the same time, I had an $18 million townhouse listing on the Upper West Side, and we were doing a broker's open, but I had the listing for, at that point of maybe a month. So I had a colleague of mine host the broker's open at an $18 million listing. That's the shiny object, right? But instead, I did the $400,000 open house. The $18 million seller, I got him multiple offers, never accepted them, wound up getting foreclosed on. So that went away. The $400,000 open house, I wound up selling. Years later, that buyer used me to sell that property and buy something much more expensive. I got a $1.6 million listing on the same floor as this $400,000 listing from somebody that came to the open house. You got to remember that not only the buyer comes to the open house, but people from the neighborhood, especially our market, which is a vertical market, the person that lives in the $10 million penthouse is also potentially coming to that listing, maybe to check it out for a child or just interested in who's working in their building. One of the potential purchasers who didn't wind up buying that apartment, but I helped him buy something else, came with his father. His father gave me an $8 million listing on Central Park West that I sold. And then I wound up farming the building with this $400,000 studio and getting one of the higher floor units that was about 3 million. So the 18 million shiny object turned into zero, and this 400,000 probably turned into about $15 million worth of business.
Wow. And let's just make sure we're all clear that what he's saying is he personally did the open house. It wasn't that somebody on his team or his assistant or right-hand man, it was him personally doing a $400,000 listing, which, you know, for some markets, a $400,000 in New York is probably like $100,000 here for us, right? That would be almost like
75,000 maybe, you know.
Okay, so it's like a mobile home where I am. Okay. That, you know, so keep it, I want to really harp on that, on putting that into perspective. A lot of times we think that it's the more expensive thing that we need to go after. However, you made the right decision because you had made a commitment to the clients, and that is, you know, part of your brand. And you did the lower listing, and it paid off. And you know, you quantified it, but I bet if you actually went further with that, it's worth even more than what you're able to easily assign to it, because there's been other referrals and stuff that came from it as well.
Exactly.
So great job making that decision. But that's a hard one for people to make. I think a lot of people probably would have gone with the 18 million, you know, with the bigger one.
Exactly. But my mantra is business begets business. And I think in a human to human business, the more humans that we interact with, the more business we do, the more branches that come from that initial seed. Do you mind if I tell another story about a $400,000? I mean,
absolutely, go for it. I love your stories.
They call me Storytime Seth for a reason, but I got a referral in 2015, a $3 to $4 million buyer. He had just graduated from Cornell Law School. His parents were giving him the cash to buy this home, obviously high net worth family. And we were making an offer on a $3.5 million property. And as we're doing it, you know, he just said to me, you know, I've kind of changed my mind. I only think I'm going to be in New York for 2 years. And then I think I want to move to the West Coast. And I said, oh, so you want to become a landlord? And he said, no, let's sell this in 2 years. And I said, you know what, with the New York isn't, you know, we're taxed and, you know, there's a lot of closing costs. And I said to him, I can't guarantee that in 2 years, you're going to even break even on this with, you know, approximately, you know, broker fee, transfer taxes, mansion tax, approximately 10%, 9% of closing costs. He decided not to buy. I talked myself out of a $100,000 commission, which I'm very happy to do because I look at this as a very long-term career, not a, you know, get rich scheme. So I wound up talking him out of purchasing. About a year later, he referred me his friend Kathy from Cornell. She did not have deep-pocketed parents. She bought a $400,000 property. It took us about 8 months of me actually working with her, not a team member, because this was a referral and I value relationships. So I worked with this $400,000 buyer. We finally, you know, she lost out on a couple of things. She said, Seth, give me to a team member. I said, no, Kathy, we're 3/4 of the way up Mount Everest. I'm getting you to the top. So she gets this property. Today, this is 2016. Today, we're in contract for a property for her for much more, but that's the tip of the iceberg. She subsequently, since 2016, I could trace $50 million worth of business to Kathy and her group of friends. She went to Cornell Law School. She works for one of the top law firms in the country. She was just starting at that point. That's why it was a $400,000 purchase. In 2021, I closed 3 multi-million-dollar sales to 3 of her friends in the same line of the same new construction, one showing each.
Wow.
So,
Oh, you gave me chills on that one.
yeah, me too. But again, it's, I always want my team members to understand this. This is a human business. Like, we have to talk to our clients to understand their motivations so we can best help them. And by, I have a lot of isms, but one of my isms is, first, you get people to trust you, right? That's the listing presentation, the buyer consult. Through the process, they start to like you. Ideally, they start to care about you by the end, and that's when the referrals start to pour in. And my business is over 90% referral, about half of that from real estate agents, from training and speaking engagements, half of that from Sphere and past clients.
So that says a lot about you, because clearly they appreciate you, love you, and you've done a great job for them, or they wouldn't keep coming back or sending referrals to you. So that's that's the best kind of business you can have, right? Because now they want to work with you. It's not you fighting for the business. It's them raising their hand and saying, hey, Seth, I want to work with you.
Yep. And it's also, when you have success with somebody, when I go into a listing presentation, I don't say, I did this, I did this. I tell stories of my client's success. Obviously that, shines a light on you, but you do it indirectly, and people are much more, receptive to stories of success. They want to be in the group of people that are smart, not the group of people that are making mistakes. So you're leading with breadcrumbs to get people to do what's best for them, because people often don't make the choice on their own that's best for them. And as an advisor, I want them to make the best decision, but if I tell them to do something, their back goes up,
Right.
they're defensive. But if you
Right.
show people success, they want to jump in that camp.
I love that, because humans are naturally distrusting, right? Especially in real estate. So
100%.
sometimes I feel like the more you tell somebody what they should do, the less they're going to do it, the more they're going to run the other way. However, like you said, if we can show them the results, we show them that the people that we admire listed with us, or that they admire, that they want to be like, chose us, well, why wouldn't they choose us?
Of course,
they'd be making a silly mistake if they didn't, right?
Exactly. And I don't disparage other agents. I look at agents as a resource, people that I want to collaborate with to get deals done. But believe me, if somebody's distrustful of real estate agents, I'll say I am too. There are only so many good real estate agents that if you don't use me, promise you'll use somebody really, really good.
I like that. So you mentioned the buyer consultation. That's something that I don't think we've ever talked about on this Zoom. Can you just, at kind of a high level, just touch on, what does your buyer consultation look like? I don't know how many people on here actually do a buyer's consultation, but I will say in the area that we're in, it's not necessarily the norm. However, it is a very useful tool. So I would just love to hear a little bit about your perspective, because I heard you say that by the end of it, and you're diving deep during the buyer's consultation. So talk to us a little bit about the relationship building there.
So when I say buyer's consultation, it's usually a phone call.
Okay.
The listing presentation happens typically after a phone call. So there's two things I want to do on the phone call, or three. I want to show value. Number one, I want to speak to their concerns, their motivations. And how do I do that? I ask a lot of questions. Mm-hmm. You don't get any information by talking. You only talk when necessary. This business is being an investigator. When you're negotiating, you're trying to get as much information as possible. You're negotiating with your clients, you're negotiating your value, but you're also trying to uncover their motivation, because sometimes they'll say something, but that's not actually the motivation. And you dig a little deeper with questions and you find out what really matters to people. Mm-hmm. And then you can help them achieve that goal. And if you don't ask a lot of questions, like for instance, in a buyer consultation, I want to know if they're going to live there, for X amount of time. If they're only going to live there for 2 years, we're talking about a condo, not a co-op. I want to take the co-op off the question, out of our conversation. Oh. I want to whittle it down so that we're best able to serve people. And we do that by asking questions. The other thing is I have a cheat sheet before every single call that I make. I have 12 boxes. The amount of, and this is for a micro market typically, not New York as a whole, but it might be before I know what they want. It might be for Manhattan as a whole or Brooklyn as a whole, or if they said they wanted to be downtown or Upper East Side in their email, I will cater it to whatever parameter I know about search. And I'll have the amount of supply month over month, year over year, uptick, downtick by percent, month over month, year over year. I'll have pending what's on the market today, but where does that fall in line month over month, year over year? The next is market pulse. That's the ratio of active supply to pending. A stronger number is a seller's market. A lower number is a buyer's market, a neutral market. But I could use that tool in a different context with somebody who's looking to sell in a great market and buy in a lesser market. And, you know, it's not that there's just one monolithic market, right? There's so many different markets that if you can get nuanced, you could help people see the benefit of selling in one market and buying someplace else. That's a huge piece of my business. So the market pulse, then it's average days on market, month over month, year over year, average discount in that submarket, month over month, year over year, percent of contracts going above ask, month over month, year over year. You know, there's several more, but it's in front of me. So when I'm talking to them, the way that I'm showing that I have value outside of Zillow does not have market pulse. Zillow does not have average days on market, average listing discount. There's one chart that I use that's average listing discount in the first 30 days on the market and average listing discount after a property hits 30 days. So we're really deep in the data, and it's data that they don't see in New York. It's Street Easy that's owned by Zillow. We don't really use Zillow platform, but it's stuff that they don't have access to, because if you're just quoting stuff that they have access to, buyers will often say, why do I need a real estate agent? And I always say, well, at 4 a.m, I'm not going to be doing a search for your property, but if you can't sleep, you are. But I know, you know, all these data points. I'm not saying that, I'm showing them, but I also know which buildings have a historic above average appreciation, which buildings have, you know, are problematic, you know, so showing value outside of just being an order taker is a huge part of my business.
Seth, where are you getting all that information, and how long does it take you to put together like one set for like one area? How long does that take?
It used to take a long time because I was doing this before I had now a paid service.
Okay.
So it actually takes about 30 seconds.
Okay. I love that.
It used to take me about 3 days to put this together.
Wow.
It now takes about 30 seconds. And it's a data analytics company that we pay.
Okay. So what I'm hearing you say, despite that it only takes 30 seconds now, is that you used to spend 3 days putting this together, which says how important that is to the conversation for you.
Yeah. So in New York, the majority of our luxury clientele are in finance. If we can't speak in finance terms, like I don't talk about a sale or a deal, I talk about a trade. I don't talk about an opportunity to make more money on the next property. I talk about an arbitrage. So it's not only that I need to be data deep, I also need to understand the language of finance. And I don't read a lot of real estate publications. Every morning I read a couple economists. I read about what's going on with the Fed. I look at what's going on in the stock market. You know, our market in New York, but every luxury market is driven by people who have some kind of sophistication around finance, right? So we're trying to understand what makes them tick. And, you know, if we can see the writing on the wall that the stock market is, you know, faltering, that might be a time where some people might want to put their money into, you know, a hard asset, or when inflation was on the rise, I was having conversations with clients about a real estate purchase is a hedge against inflation.
Right. So you're truly the economist of choice. You are like one of their like financial advisors, even though it's about real estate, but it's still like this is a great investment compared to what's happening over here in the rest of the world. So you're really multifaceted, and you are, they always say, Gary says we should have like, 5 people on our board of directors. You're one of them. You're one of the 5 people for all those other people.
And this was not something I went to college for. I went to college for environmental biology, but I saw a need, something that I needed to become better at. And it's, 20 years of reading finance articles. It's 20 years of, again, remember I said, we find out way more information by asking questions than we do by speaking. When I'm with people that are smarter than me, I ask a lot of questions. And I try to be in rooms with people that are smarter than me, especially if somebody's, a private equity, a partner at a private equity firm. Believe me, I'm going to ask them every prediction that they have. And then I'm going to internalize it and share that with clients that are less sophisticated.
I love that. I know, even here, we're not in the finance district like you are, but we go over market stats, we go over what's happening. Is it a buyer's market, seller's market, things like that. And it's interesting because you see some people who kind of just check out. They're like, I don't need to know that. And it is so important for no matter where we live, what market we're, for us to all know our numbers and understand what's happening in the market. So I love that you're sharing that information and that you take it to a whole new level.
Yeah. And you know what, if people are tuning out, I will, and they're, in the arts or they're, in marketing, I'll show them a couple things, but that's not where we're going to dwell. Right. So it's also knowing your audience. So you're not having, which is why I've always hated the word script, and I've always hated objection handling. I like to speak to people's concerns. I like to understand motivation. Right.
So you're more of a conversation, not a script, not a prescribed. I don't know if that's the word.
Yeah.
But just coming from the heart and hearing people and hearing their needs.
Yeah. I mean, we are in a people business. It involves real estate. So we need to understand what their objectives are, what's important to them. It's funny, I worked with a 96-year-old seller. And typically you go in thinking the 96-year-old seller doesn't care about every dollar. They've owned this for 50 years. They care about not staging, not painting, not doing repairs. They care about speed because they're moving to Florida. This guy cared about every last dollar. So we drill down into pricing strategy more so than I do with some of my 30-year-old clients who've only owned the property for 5 years, or 40-year-old client owned for 5 years. So you don't go in presupposing what people's motivation is, because oftentimes it's wrong.
Mm-hmm. Yep. Yeah, and it's interesting because sometimes the people you think who have the most money are actually in a financial bind, or somebody who says that they're in a hurry to sell, they actually meant to say, I need all the money, so I would actually take more time to get it. So digging down really gets us to the core of what is happening. And a lot of times it's not at all what it seemed on the surface.
Exactly. I have a $750,000 listing with a balcony just right over there. It's a co-op. The person who's buying is worth $24 million.
Wow.
But he's buying 750 because he's very conservative. You have other people worth 200,000 buying $1 million. So just everybody's different. You have to really understand what's important to people.
Love that. Well, Seth, I think we should open it up to questions because I've seen a few questions pop up here. Davies is good at reading them for me so that I don't have to focus on that. So Davies, what do you got for us?
All right. So we definitely want to know, what is the name of the data analytics company that you use?
It's New York specific. It's Urban Digs. But I would guarantee I mean, maybe not in smaller markets, but I would guarantee in bigger markets, there is somebody that you could pay to do data analytics for you. Even in a smaller market, there's probably some statistician that you could hire freelance, but this is a specific data analytics company for New York real estate.
Got it. And
But
it's
I used to do it on
great-
my own. You know,
Yeah, so if you can't find one, he's saying you can create your own and crunch your own data. But there probably is something somewhere. Even your MLS board has a lot of that information. It may not be all in a nice, pretty package like he has, but you probably can get most of that information. And if you're with Keller Williams, you probably get it from your market center. So,
Right. And we don't love the pretty package that they present, so we actually take it and then put it into our pretty package. Prettier
nice.
package. Yeah.
Right. You want it to look the way you want it to look
Yeah,
with your branding.
we're very brand specific. Everything looks a very specific way.
I like it. Okay. Davies, we got more questions?
Yes, but just for my KW agents, I added somebody that we use with Natasha Tullo that she hired. He's a statistician. His name is Jeremy. He's really great and pretty affordable, so he can create that data for you guys. So I put that in the chat for you. Another question was, hold on, sorry. They wanted to know about closing gifts. That was one of the first questions we had.
Cool. Well, I've evolved a lot in 20 years. I used to give champagne to everybody. Even people that I found out later didn't drink. So I don't have a questionnaire that goes out asking people, I've seen agents that do that, but I try to uncover through working with them what's important to them. And, I've given baseball tickets to someone who's a diehard Yankee fan. I try to cater to what I know they like. A gift certificate to a restaurant they spoke about, potentially a nice bottle of whiskey for someone who's spoken to me about that, a round of golf. I mean, it really is catered towards people. I don't have a standard set of knives that I send. If we don't really uncover what's important to people, and I know that they're people that drink, I will still send the bottle of champagne. I'm not going to lie, but I always do two other things. If it's a luxury, over a certain price point, I will also take them out to a very nice dinner, and I will ask them to invite a friend.
I love that. So you went right back to more relationship building. So you closed and now you're spending more time with them. Whereas I think a lot of agents are like, we're closed, we're out, we're done, and they run.
Yeah.
And you're saying, let's spend more time together.
Exactly. And if they've got a charity that they've mentioned, I support that charity. I'll go to the gala, I'll do whatever. I mean, this is for my core relationships, not a $500,000, person that I worked with very quickly and we didn't get incredibly deep. I'll still do some of the things, but it's not going out to a dinner. It's not going to their charity event. This is for, the 50 people in my world and their associates, their network that I love on. But the other thing that I thought of this about 2 years ago, and I think this is one of the best evolutions of my business, is we support 6 charities here in New York, and they're on our website, and we send our clients after they close a link to that page of our website to show the 6 charities we support, and we make a donation in line with the size of the closing, but we make a donation to one of our preferred charities in their name, and we tie it to a review.
Nice.
When they give us a review, we make a charitable donation in their name to one of our charities. And 2 things here. We always get reviews now. And, I've been in contact with some of the people that we support, and the New York Foundation for the Arts is one of them. A couple of months ago, I sat at the executive director's table at his gala because of our support. And that opens up a door to potentially more business.
Wow. So did you guys see what he just did there? So everything is growing each other, right? So, and it's all in the luxury arena. So he's got the luxury client, he's making a donation on their behalf, which now furthers the relationship with that client. But now he's made so many donations to the charity that now they love him and they're inviting him to the head table and welcoming him into, their fold, which now means what? That means he's going to now meet more people that are making those kind of donations and those people in that income bracket. You're a genius.
I've stumbled onto a couple things.
And you know what, Seth? I think the most important thing is to remember that I believe in my heart that you're genuine. I don't think that you're doing this just to, get where you want to be. I think you're truly genuine. So you're actually doing what you love doing. You're meeting people, loving meeting them, and it's all paying off. Like it keeps paying forward to you because of your generosity and your big heart.
Thank you. And I will say this, high net worth people, luxury clientele have very high BS detectors. So if you're doing something that's not genuine, you're going to have commission breath. Commission breath turns most people off, but it really turns off sophisticated people that are used to people trying to sell them stuff and expect things from them.
Mhm.
So, I don't go to wine tastings because I can't speak intelligently about wine, but I go to art openings because I can.
Okay.
Right.
That makes sense.
That was great. So now this is sort of a two-part question from two different people. One person asked if we can talk more about marketing these luxury listings. And then someone else asked, what about marketing the private listings that they're dealing with some luxury clients that have unique properties and just don't want to go public on the market. So I guess the two-part is, how do you market your listings? And then the second part is, how do you deal with a client who does not want to go on the MLS?
Well, because I truly believe in the relationship aspect and the kind of spider web branches element of real estate, especially in a vertical market like ours, I market every property the same way. We use the same luxury photographer, the same copywriting, the same videography, the same everything for every listing independent of price point, because we're a small geography. Our $10 million potential seller lives very close to the $750,000 seller in the same building, perhaps. So I didn't mention this, but I sometimes will get my clients that have had high levels of success with me to write letters to their neighbors. So instead
I love that.
From me as a postcard, it comes as a letter that we'll print, we'll hand address the envelope, we'll put the stamp on it, but they sign it. They write it, they sign it, we duplicate it and send it out for them. But we market very deeply to real estate agents. I actually market more to real estate agents than I do to the consumer. We have a list of who does the most deals in certain neighborhoods, and we get our listings out to them before they hit the market. If it's a sub-market that I know there's 5 people that do the lion's share of the business there, I'm going to call them, right? So I don't hide behind email. I don't hide behind text. I call people. That's a big part of my day. So, we're really marketing heavy to real estate agents. I like to do deals with real estate agents. I don't like to do deals where people are not represented. I find they're difficult and untrustworthy is not the right word. Not
untrusting. They're not trusting you.
Untrusting, unvetted, all that kind of stuff. So I love doing deals with real estate agents. So we market heavily to real estate agents, and that leads into off-market properties. We get a lot of people from around the country have a luxury listing, and they're like, "Hey, Seth, can you market this for us?" Like, I can market it to my database, and I can also market it to real estate agents in New York City if there's a compensation for them, obviously, right? So off-market is about getting it in front of real estate agents in synergistic markets. It's marketing to our database. We've put together a pretty large database over 20 years. So off-market is really just about getting the word out. Obviously, there's no website for people to search it on. So it's, if it's something in New York City, I will blast all 30,000 agents in New York City, right? I don't know if an agent that's only done 2 deals has a parent that wants to buy this or a friend. So it's marketing to me is always like cast the widest net possible and then focus. Like do both. It's not one or the other. So it's casting the widest net and then being really focused on who you think is going to be the buyer.
Mhm. I love that. I love that you said about advertising or, you know, promoting properties from other parts of the country, because that's actually something that we don't really do. But now that you're mentioning it, we absolutely could. If we have some pocket listings down here that for sure you guys probably have some people up there that might want to buy them. So
Yeah, I heard some
Seth,
people from New York.
you're getting it all from now on from me.
Some people from New York move to Florida periodically, I've heard.
Oh, yeah, right. Every now and again.
Hawaii.
There you go.
All right, another question, do you work with Canadian buyers? And if so, how do you speak to the current conversion rates?
We're not actually seeing a ton of foreign buyers right now. Obviously, it's always tied to the exchange rate and it's tied to the ability for certain countries to get money out of. So China is always a big one here, but it's tough for, unless you're super, super connected, high net worth, it's hard for them to get money out right now. Canadians are some of the biggest. It's what at one point it was the biggest group buying in New York City, surprisingly, even to me. But if you're talking about exchange rates, then it's you don't buy something and then eventually sell it and put the money under the bed, right? There's always a next opportunity. So with anybody, it's talking about what's the long-term goal, or are you buying this because you have a child coming to NYU, then let's look at the rent for 4 years. Are you buying this to eventually rent out? Let's talk about future appreciation. And it's the same conversation that I have in a hyper aggressive seller's market when I'm working with a buyer. We know that we see the value up to here. How long are you going to live here? So if I just won a bidding war for somebody, and they paid 12% above ask in Brooklyn. That's hyper competitive market right now, Brooklyn. I bought there about 1.5 years ago. One of the smarter things I did was get out of Manhattan. Not that I don't love Manhattan, but buy in an area that was booming. But we said the value is up to X. But she said, I'm going to be here for 30 years. And I said, well, let's talk about how much future equity you're willing to trade to get this property. If you're going to see 40% appreciation in the next, 10 years, are you willing to see 8% of appreciation to get the property today? So instead of talking about overpaying, we're talking about trading future equity to get a property today.
I love that.
But you don't do that with somebody who's going to be there for 3 years or 4 years. So again, it comes down to conversations.
Right. Got it.
Awesome. I would like to give the floor to Shoshana Hill. She's had her hand up and I just wanted to make sure I went in order. So Shoshana, the floor is yours if you'd like to unmute.
Oh, wow, thank you. Great session, by the way. My question is, other than being in person with your clients, your past clients, how do you maintain the relationship? How do you bring value to them if not in person? Okay,
so one of the first properties, I love stories, right? It's obvious. One of the first clients that I ever closed a purchase with was in 2003. I actually met her at an open house for a senior agent who did none of his open houses, because he had been in the business for 40 years and he had me. He thought, Seth, you seem like you know how to speak, do some of my open houses. First open house I ever did for him, I actually closed 2 buyers from that open house. And one of them, it was 2003. We finally, she sold that place in 2021. And then she wound up buying a new construction on the Upper West Side in 2022. How did I maintain that relationship for 18 years with her? I remembered things from our conversation. She liked to travel. She worked in the beverage industry. She was from Sonoma, California, where I have a lot of friends and I've spent a lot of time. So if something came up relating to one of those three things, I would shoot her a text or an email and say, oh, I noticed that these two beverage companies merged. Were you involved in that? And then if you can think about things that are organic to have conversations with people about, real estate always comes up. Her name was Kristen. Kristen would always say, what's my place worth? And I'd say, well, you're not selling, but let me think. And of course I had the cheat sheet in front of me, and I was like, well, Chelsea, West Chelsea, 3 bedrooms with outdoor space. There's only 2 of them on the market right now. So if you sold today, you could achieve this. Markets are dynamic, pricing is fluid. I can't guarantee when you're ready to sell what it's going to be worth, but today it's around here. But I have clients that love, I'm not a big baseball guy, but if I see something interesting in baseball, I'll share that with somebody. I pay attention to what people say, right? I consider myself an investigator. That's a big part of our job. So I'm trying to learn as much as humanly possible about people so that I have avenues for future conversations with them long after the closing.
I love that, Seth. Are you making all these notes? Like, do you have a CRM that you're putting notes in, or are you just naturally gifted and you remember it all?
I do now. I used to, when I was younger and my brain was a little bit more intact, I used to remember it all. Now I take tons of notes.
I love that.
Yeah.
Awesome.
All right. We also have a question. How exactly do you ask the client to bring a friend to dinner?
Hey, I'd love to take you out for dinner to celebrate. Feel free to bring somebody. It'd be, great to meet somebody in your world. And, I'll follow up and I'll say, oh, do you have somebody that you wanted to bring? If they're resistant, that's the end of it. I'm not pushing people to bring somebody, but I will invite them to bring a friend. I'll follow up and ask them who the friend is. But if they don't want to bring a friend, that's okay. So Kathy, who introduced me to those 3 private equity friends of hers who closed in the building, I asked one of her friends to bring a friend, and she brought Kathy. So it wasn't somebody new, but it was somebody that I got to see again, right? So it's not, ideally it's somebody new, or it's, getting deeper with somebody that you've already met.
That's awesome. Now we do have 2 asking for some information that you shared. One wants to see the cheat sheet of the stats that you give. And then another wants to know if you have the email, the template that you asked for the review that maybe you can share with us.
I have both. I see John May, my director of operations, is on the call. That's more in his wheelhouse, but we can share both. And then, if anybody has any follow-up questions, feel free to reach out.
Awesome.
Awesome.
And if you send them to me, I can send it out as well.
Perfect. That's what we'll do.
Awesome.
And
So-
John's email he just put in the bottom is info@levincong.com.
Awesome. Thank you. Another question was, do you send holiday gifts?
We send holiday cards. We don't send holiday gifts, but everything is fluid depending on the relationship with people. I might get invited to somebody's holiday party. Then I will certainly bring a gift, but we do cards. I see Christine asked if we do events. Not enough. But the reason that I stopped doing events, I used to do a ton, was I had a hedge fund manager client who complained to me that there were people at the party that were in more analyst in, entry-level positions in finance that were asking him for jobs. So I kind of like, I've got to segment my, events a little bit, and I just haven't coordinated that. But my events are small scale. Like, I have Knicks season tickets. I invite a client to come with me. I go to their charities. I invite them to, partake in our charities, that kind of stuff. But not New York is, it's a little different because people here have so many things that are filling their their plate. They, oftentimes after work don't want to go out to some event. But we do small kind of one-on-one or 1-on-5 kind of things. We don't do the big events, the big client events, but I think we should actually start to incorporate that back in.
But I think, Seth, that goes back to you're so relational. Like, it's easier to be relational in a smaller group and easier to get deeper in a smaller group.
Exactly. I mean, I think that that's the reason. But the original reason was because my hedge fund client complained to me.
Well, it takes all types, right?
Exactly. And he actually moved to Miami and didn't tell me, so I didn't even get the opportunity to refer it. But
Oh, man.
I should have kept the parties.
You'll bring them back. You'll bring them back.
Exactly.
All right, Davies, I think we might have to, any more questions? We're coming to the end here.
Well, someone did ask, can we have a copy of the email that you sent to the neighbors with his client's signatures? But I sent it directly to John. John said yes. So shout out to you, John. Thank you. Here we go. We have a hands up.
Oh, Seth, I guess I'm Sandra today. Anyway,
You are,
I was,
you're me.
Hi, Sandra, too.
yeah, Sandra too. It's Karen, obviously. Just wanted to know how many times you usually call your clients, because I find a hard time keeping up with enough of them. I've got my favorites that I call, but how do you make sure to reach out to enough of your people?
So I communicate with people the way they want to be communicated with. If people are texters, I'll shoot a text. If I have something important, I'll call. I don't just call people out of the blue during the business hours. When I first came over to Keller Williams, I had never heard of lead generation, and I've been in the business for 13 years, and I was in the top 20 at Douglas Elliman, and I'd never heard the word lead generate, right? Came over and everybody was like, lead generate, lead generate, lead generate. So I started calling my clients during the day, and people were like, what's wrong? What's going on? So I learned that particularly in New York, I had to cater it around a reason to reach out, a text, an article. Like if somebody's really into the ballet, I'll send an article and I'll say, I'm sure you saw this, something along those lines. But there's certain clients, I mean, my core clients, I will call them all the time, right? I just closed on a townhouse listing of mine in Brooklyn where we broke the record for this collection by 15%. That client invited me to his golf course. I went with him. I called him. I was like, that was so much fun. When do I come back? I'm going again next week. Like, it depends on my relationship with people. But my real core people, I call all the time. Again, I don't spread wide. I go deep. So I know the people that I know really well, and I know how often and how they like to be communicated with.
Good. Thank
Very
you.
personal. Very
Thanks.
personal, Seth. Thank
Thanks.
you. All right, well, I think we are at the end of our time here, but Seth, do you want to throw, or your guy throw your contact information in the chat so that everybody can have that, because they are going to be sending you referrals. They all promised when they joined the Zoom that they'd send you one. No, well, hopefully you'll get one or two.
Yeah, that'd be great. So John just put it in. It's Seth@levincong.com. Easy to remember. And my phone number's in there as well. And Sandra, thank you so much for inviting me. This was a lot of fun.
Well, thank you. I always love hanging out with you, and I look forward to seeing you at Luxury Symposium, because I know you're going to go. And
I'll be in
hang
Florida.
out.
Yep. And I'll be in Florida for 2 weeks around Christmas, New Year. So we'll have to get together.
Okay, absolutely. Sounds good. Well, thank you, everybody. Thanks for joining us, and let us know what we should rebrand. All right. Thanks, guys. Bye-bye.
Yeah.